Hey everyone, welcome to the next video. So far in the 8 trading course, we've identified structure, liquidity, and tying everything together with a higher time frame to lower time frame narrative. So in this video, we will start to truly dive deeper into how we trade here at 8 Trading. So we've covered overall structure and how the market creates internal liquidity, external liquidity, specific ranges, higher highs, higher lows, and how we target those highs and lows based off liquidity points in the market. So just a quick recap, we have 3 market phases. So we have consolidation or accumulation, as we call it here, because we know what the market's about to do and how it's about to dispose. We have a bullish trending market and we have a bearish trending market, right? Within these pullbacks, we have specific structural points, and in these big lower lows and lower highs, we have other structure points. But how we view it here at 8 Trading, we have internal liquidity, external liquidity, internal liquidity, internal liquidity, external, and where we're moving based off a higher time frame narrative. As for example, this could be a specific monthly low to where we're going to run liquidity, which forms a lower low. But since we're running external liquidity, structure is going to shift, momentum is going to shift, and we're going to target this next external liquidity high while taking out all these internal highs. So this goes in hand with order flow and price delivery, because order flow is simply which way the market is flowing and how orders are being delivered and how they're being set and placed in the market, which is price delivery. So every time you see a trending market, what you're seeing is bearish order flow if it's going to the downside, and how price is being delivered with all the pullbacks, whether it's hitting order blocks, breaker blocks, or specific high and low internal and external liquidity points within our ranges. So what does that look like exactly on the charts? So going into this week on Euro USD, looking at our monthly chart, tying everything together that we've learned so far, right? So on a monthly, we can easily identify that we have a low that was taken here. We have a high that was taken. So as far as current order flow goes, we're bearish because we're hitting a monthly order block. Again, we'll dive deeper into it, but an order block is an up candle before a down move that's created a significant structural point, which we've taken up that structural point there. Also, so in the market, we have bearish order blocks and bullish order blocks. So this is a bearish order block because it's a bullish candle before a down move. And you can see that price respects this bullish order block, which is this down candle before the up move that broke structure. The reason why we're more so playing off this one is because price did what? We took external liquidity here. So this is going to be a valid order block and a valid structural point because we've already swiped external liquidity. Now, we swiped external liquidity on the bullish side of this range, but the issue is that we have the actual structural high here. So this is where price would ultimately need to target, because this is the high of structure right here. And this is the low point of structure with this whole leg that created a higher high and higher low and formed liquidity. Also, we have clean traffic because there's no gray candles here. And we can see where price started to give a bit of a reaction and not come back into this range because it took external liquidity from this range. But with the whole structural point, we're still on an internal level. So as far as a higher time frame range goes, we only swiped internal liquidity so far. So we come back down, and this goes in hand with this video subject with how price is being delivered on order flow. So overall order flow is still bearish because we have point 1, point 2, takes external liquidity, creates that pullback after breaker. We respect the order block, but now we're failing to break this high. So price needs to pull what? Internal liquidity, because we pulled internal on a bullish point. Now we need to pull it on a bearish point of this range So it'll be external liquidity of this range, but internal on the overall bigger picture. We will still respect this order block because it ran external. So once we take out this low, we could still play off this potential order block and go higher. And so we're seeing how price is being delivered because the market doesn't just go one way. You have pullbacks, you have buy orders, and you have sell orders. So current order flow is bearish because we're playing off a bearish order block. So as far as price delivery goes, we know on a higher time frame, we're coming off a bullish move. And right now we're just need to pull liquidity to go higher because, excuse me, relating back to our structure, we have external run on liquidity, a bullish break in structure, a healthy pullback to an order block that was mitigated successfully. And we'll get into that. Mitigation is when price comes back and successfully creates a move off of it because this is a valid block and it means that the banks and financial institutions actually put orders here. We pushed up, we cleared all this internal liquidity off this range, but since this is an external point and there's valid orders here because it created a valid move, all we're doing is coming down to pull internal liquidity to go higher because you have a higher high, a higher low. I apologize. You have a lower low, breaking structure, higher high, higher low, failed swing point in the market. We're going to come down. We're going to create a lower high and then a higher high to run what? This next liquidity point after we take out this liquidity point. So on a higher time frame basis, we should be looking for sells to come down to take out this next point of liquidity because we had a failed swing point in the market. So as far as this range goes, we've cleared all this internal liquidity. And now we're going bearish to fill in, take this and go higher. So current order flow is once again bearish, which we've identified. So we should be looking for sells and we can see how structure has shifted. And then how price is being delivered is it's being delivered to run our next point of liquidity. So we've built in our higher time frame narrative on the monthly, which is currently bearish. And now we'll start to work our way down on the lower time frames. So as we can see here, once price filled in our clean and balance area and hit our last up candle before the down move that broke structure and ran liquidity, we have a valid structural shift. So here, price creates a low, price creates a high, we come down, we respect it, and what do we get? We get a failure swing in the market. So price needs to pull liquidity in order to go lower. And also it needs to pull it in order to go higher, but we need to identify how structure is shifting. So once we get the fair swing, price comes in, we take out this low and price has validated itself that we have a valid shift in structure on the weekly because we created a new low, failed to create a new high and create a new low. And we're not coming back into this dealing range. We're playing off a breaker. So price is officially bearish. So we'll start to work our ways down. So current order flow, we know in the market is bearish and we should not be looking for any buys unless structure shifts, liquidity is taken, and the market shows us otherwise. So we're currently bearish on all of our time frames. And now we need to identify how the price is being delivered on each and every liquidity run. So we'll go into this current week. We'll identify this last liquidity point that we should be targeting. So on the daily, we can see that. Okay, so going into the 4 hour, we can see how we had a healthy pullback. Price swiped liquidity on an external level of this range, played off our order block. We had a valid break in structure. And then when it tried to push off this order block that took external liquidity, structure was not validated and price delivery was not validated. Because why? Overall order flow is still bearish and price delivery is confirming that. Because no structure point was broken, failed to break the low right here. So what happened? They pulled internal liquidity, they broke structure, they pulled up, played off our order block, and order flow is maintained and price delivery confirmed that. So going into this week on a trade that I took in a markup that I have, off the 4 hour, I identified my order block, which was this last upgrade candle before the down move that continued to create a new low. So I identified my order block. I then dropped down to the 1 hour. Again, this blue line is our point of external liquidity on the higher time frame. We know order flow is bearish. And now I'm looking at how price is going to be delivered. So let me go ahead and actually remove this. So right off the bat, what do we see? We see an up candle before a down move. So that's our order block. We see price came back to mitigate this. Mitigation is just when price comes back, successfully enters that order and breaks down again. So we have a successful structural shift. Structure is confirmed, liquidity is confirmed. Price pulls back up within this wick. This last order block was mitigated. So there's a hit. So on a smaller time frame, there's candles within that wick. And we also have our order blocks. So this is my point of interest that I identified, and you have added confluence with this range because we have a breaker block. A breaker block is the lowest candle of that range. If you know there's no liquidity if there's no internal liquidity to be grabbed, price will not come back into the range. It will hit the bottom of that range, which is your breaker, and it'll go lower because it has no liquidity to pull. If price needs to pull liquidity, as it did here, it would come back into the range. It would take some form of internal liquidity, which would be here and here, and then price would dispense and distill lower. So write that down and always remember that, because we will get into more examples of that later on in the course. So again, this is my point of interest, which is added confluence with this breaker block, my order block, and the wick that took liquidity before moving down. Because if this wick was taken out, that would invalidate my sell bias. So again, price comes all the way down, and this is where we start to get our pullback. Now, I know this is just a pullback because you can see how momentum and how price is being delivered is so slow in the market, and we're not having what broken? Our actual structural high, because this is still a single leg pullback on an internal level of liquidity. And that's where a lot of traders get faked out, because no significant structural points are being broken. We're just breaking all internal liquidity points. Also, the whole time we're building liquidity on a sell side because no liquidity is being taken on an internal level. All we're getting are break and retest within this internal range. So once we come into our point of interest, which is our area where we're looking for sells, this is where we start to identify on a smaller time frame what's exactly happening. So as soon as we come into our point of interest, what do we see? Price comes up, drops down. So here's our first structural break, which we can identify on a lower time frame to get a little bit more clean. So go ahead and move that. So right here, we have our first structural break. Now, remember, I need it to be confirmed. So what do we have here? Price does not take out these highs. Instead, it respects our order block. You can see how the momentum really slows down, and we're having what? That liquidity buildup, that slow pullback where it's clearing all that internal liquidity. Price then gives us our second confirmation on this secondary break in structure, which we have here, where it barely pierced it. So price pulls back, and where am I looking to sell? My last up candle before the down move. Now, why are we not looking to sell at the breaker? Because price has all this internal liquidity that's built in to be ran. So I would be looking to sell right here. And again, we have to make sure our timing, momentum, and everything else is lining up in order to validate the sells. And as you can see, price then breaks down even further right there. And we start to get what? A structural shift in market and momentum. Now, as you can see here on the re-entry, we have our breaker because price doesn't need to come back into this range because there's no internal liquidity here because you have valid breaks and pullbacks. You don't have any failure swings where price needs to pull liquidity. But we do have our last up candle before the down move, which is our order block. And you can see price never came back to mitigate it here. So this is where we start to build in a re-entry. Again, price comes here, comes up. So here you have that break. But since price pulled up and disrespected, this tells me this structural leg needs to be ran because price tried to play off this supply demand zone and order block here. So here we have that liquidity that was taken. We push up into the block. We clear out all these internal highs that were built in. Price breaks down and pulls back to our order block, and we continue our sales. So while people are thinking this is consolidation and accumulation, all price is doing is repricing within how price delivery is being set, because we know we're bearish and we can't take a 5-minute buy on a monthly sell. So we know price delivery is being set with our bearish order flow. We come up, we swipe all this internal liquidity. We hit the last up candle that created this structural break, and this would be our reentry for our sell. Also, just looking at the chart, this is at London open. So you have your Asian range, your London open, your breakdown, and redistribution to go lower. So again, going back to when we were on the higher time frame, we have our first sell entry, which is low risk, and our second sell entry, which is lower risk. So we're coming down. Again, we did identify this is that monthly liquidity point. So even though we swiped liquidity here, what am I looking for? Price delivery. How is price going to be delivered with our bearish order flow? External liquidity was ran here, but remember, once liquidity is ran, I'm looking for it to give a reaction and to still lower unless structure shifts and show us otherwise. So here, this whole push up broke zero structure. We filled in our 50%, which is equilibrium of our clean imbalance where there's no gray candles. But what do we also have? We have our breaker. There's no internal liquidity to be taken. So we're not going to come back into this range, just how we didn't here, how we didn't come back into this range. So we have our breaker block that we're playing off of, and also no structure that was confirmed. So again, I'm looking for what? Complete sells. This was all at New York Open, but I'm waiting because I need a breakdown and structure. So again, here we have an order block that took liquidity. So I'm waiting if we're going to have any type of reaction off of that. So as you can see, coming down, we hit into our order block again at our session opens, which is our London open here, and then our New York open here. But what am I looking for building in all of my time frames? What I'm looking for is any validation that price is going to go lower and run this low. So we hit our breaker. Again, I'm waiting because we're not getting any strong pullbacks, even though I actually see a very clean entry here. But again, this is not within our sessions, but you can already see structure was broken. There's zero liquidity here. So price comes, it plays off our breaker block, and we could have sold here, but we don't take high risk sells. So again, I'm waiting for my session to open. I'm waiting for all my confirmations with structure, order flow, price delivery, and liquidity, because liquidity is the most important. So price comes down into our fake order block. It's fake because, again, no structure was broken, no structure was confirmed. So we come down, and then some people might say, oh, this is structure right here. It is, but this is a 15-minute structural point. It's not validated on any other time frames like the 30, the 1 hour, or the 4 hour. So again, we have our Asian range, price comes, this is London open. We sweep our previous daily high, which is this last up before the down move that created. So what did we do? We swiped internal liquidity, right? And what are we playing off of? That last structural point. So we come in, we break down, and we pull back, and right there, sells were validated based off the higher time frame because price delivery validated all of this for us. Now, some people might say, why aren't you looking for buys if this is a run and break? Because we're on the 15-minute time frame. We're not on the hourly or 4 hour where we already built in all of our bias. So we're only looking for sells because structure did not shift. Structure did not go like this, right? We're looking at a higher time frame and building in a smaller time frame narrative. As you can see, even when price hit this, it failed to make a new high. So even if you wanted to wait, you could have waited on the failure to break higher, pull back, and you could have sold at that breaker. So all of these sells were all valid also, and they were all within New York session. So you could have had a very nice risk to reward ratio. If you would have waited, so if you would have took the initial sell, your stop would have been above here. If you would have waited for the failure, you would have set it right above the last high, and you would have targeted this low, and you would have ran a 1 to 14 R with such a tight stop because you know where the market's just laying lower. And then again, we're just waiting. Same thing. Runs this point of liquidity. No structures confirmed. Here's your failure swing, and price runs liquidity again. So the same thing happens over and over in the market on every time frame. But you have to know how price is being delivered in your higher time frame order flow, which we identified on the monthly, and that price is going to be bearish. And on every single time frame, we look at how price was being delivered. And that's how I took sells on Euro USD because I knew where price was going to distill. So we had built in 3 to 4 clean entries, and we knew buys were going to happen. So our first entry was at the shift. Our second entry was at our London Open. Our third entry was at the breaker of the trap, where you can literally see there's no liquidity here. And then our fourth entry was at the validation of the New York breakdown. So on this single pair, we could have been running multiple positions, multiple different risk to reward ratios, targeting just every time along the way, moving our stops and adjusting. So our highest would have been a 1 to 15 and so forth and so on. And it's just building in every single detail and every single narrative of what price is truly doing, because while we're sitting here looking for 15-minute buys, the hourly is showing us complete bearishness and so forth for the 4 hour, where you can just see complete bearishness, zero confirmations. And that's why you need to be careful, because for example, here you might think price is going to the moon, not realizing we're off a 4 hour order block while we're trying to take 30-minute buys. Same thing here. This is not structure. Why? This is the whole leg. So here was that high, and here's the low. This push took out, this push created no low. So even though we pull back and we have this candle here, it didn't create a new high and it didn't create a new low. So a lot of people get faked out and think that's a structural point, but it's not. What this essentially is just a fake order block in the market. Now, you're going to say, oh, but then why does price respect these ones? Because you can clearly see in structure, low formed, high formed, low formed, high formed, low formed, high formed, low formed, high formed. You're actually having highs and lows. Where's the high that was formed? This is a low, but this formed no low or no high. This is not structure. What this is actually, it's a fake order block, which is internal liquidity, which is why price came, run right above it, and then we took out this low. So you have to be careful and really, really, really have your higher time frame order flow. Everything we've gone over in every video, you need your higher time frame order flow, which is the market bearish or bullish. You need to really identify your major liquidity zones. You need to make sure structure confirms it. You need to check if external and internal liquidity was validated and successfully ran. Did structure confirm it? And also just normal and overall price, like how is price actually being delivered on the chart? Because we didn't see these candles before they were printed. After they're printed, what are the candles doing? What are they telling us? Are they confirming everything that we've built in? Or is our narrative switching and shifting and changing? Because you wouldn't sell anywhere in here, because if you did, you'd be stopped out. Why? Because even though price, for example, all in here, even though higher time frame and everything is bearish, price delivery is bullish here until we shift. So you have to be extremely careful. You have to have validation on every single thing, and you have to build in every confirmation and checklist to make sure that price is truly being validated with your overall order flow and how it's being delivered in the market. The market is designed to induce, trap, and trick you. But if you know what to do, what to wait for, and what to look for, you won't get faked out, because you'll be in on the move that the banks create, as opposed to the move that they create for retailers. So we'll get a more in depth with timing and everything and tying everything together. But as far as order flow and price delivery goes, you need to take all the videos that have been previously taught and start building everything in and tying everything together with liquidity, whether it be on an internal or external level, structure, higher time frame narrative, order flow, which is the way the market is trending, and a specifically price delivery. Because if this chart is showing you buys, doesn't matter if order flow is bearish, you have to wait for confirmation and structure to shift, because the market can do whatever it wants and distill at any point. But that's also why you need to identify your major liquidity zones. So I hope this helps, and I'll see you guys in the next video.